Great. Welcome back, everyone, to this conference on governing the global governance of plastic pollution, transforming the global plastics economy. Thank you so much for joining us for this session, especially for those who are joining us for the first time today. We're delighted to be able to co-host this conference with our colleagues from UNCTAD and a number of co-sponsoring organizations. So for this panel, I'm really delighted to announce we have an excellent lineup of speakers who will be focusing on the financing of the global plastics economy. Now, in the two sessions we've had thus far, there have been many mentions of the importance of shifting investment in the plastic sector into both more sustainable plastics and also out of certain kinds of plastics, into new business models, into different ways of doing business, into substitutes for plastics and so on. We've also, speakers have also mentioned the role that government subsidies and public financing plays in the plastic sector, and particularly upstream around oil and gas, fossil fuel subsidies, and around subsidies to the petrochemical sector. So today we have a great set of speakers to help us walk through some of the latest data and evidence around this. Some of it's research in progress and some of it's already published. So you can find links to the bios of the speakers on our website, which is now being reposted in the chat. So there's a link to the bio of each of the speakers in the agenda. As we have a big lineup for this hour, we've asked each speaker to limit themselves to around 7 minutes. We encourage all of you who are listening to post questions in the Q&A. Our speakers will endeavour to answer them over the online in the course of the hour and in their final remarks at the end. You're also free to post resources that you'd like to share with participants directly in the chat. So to start us off this morning, I'm really delighted to welcome Gabriel THOUMI, who is the head of the Plastics Program and Director of Financial Markets at Planet Tracker. He's going to talk to us about investment risks in the plastics and plastic packaging sector. Gabriel, you have the floor.
Thank you, Carolyn. And thank you, Diana. It's very nice to be welcome to this event, and thank you very much for the invitation. So I'll pivot over to my screen right now. Let's see if I can do this correctly and not have any issues. And we'll jump right in. So I'm the head of the Plastics Program and Director of Financial Markets at Planet Tracker. Most importantly, I'm your colleague. If you have any questions or comments or thoughts on the capital markets and plastics, you can easily reach out to me via LinkedIn or the email at the end of the presentation. So Planet Tracker is a financial think tank. We're based in London, although I live part-time in Austria and Washington, D.C. What we work on doing is aligning capital markets with planetary boundaries. We focus on enabling investor community engagement so they understand better what ecological limits mean to their internal processes. And from that, they then themselves can begin to determine ways they can align investor capital within planetary boundaries. Now, the plastics program specifically aims to stem the flow of environmental damaging plastics, which we're very familiar with today. And we would, of course, like to thank one of our funders who's here today, Mindaru Foundation and Nicole. So thank you very much, of course. So jumping right in further into the presentation, I'm going to be giving you a very quick survey of what the capital markets looks like across 3 different supply chain nodes. It's a lot of information. The PowerPoint will be available to you via the website. And hopefully you have some questions, and then you can email me directly. Some people even use WhatsApp and text me. I love that. Reach out on LinkedIn and we'll start a conversation either today or bilaterally at a future point so that you have the information you need to better inform the type of decisions and strategies you think that are important to you. So plastics, of course, the key issue of the plastics production is focused in corridors or clusters. The clusters are where you have a set of companies that work together across, let's say, basic chemicals, intermediates, and plastic resins, and they themselves then produce plastic that we use. Now, the issues in this sector are, from a risk perspective, the concentration. The sectors are they're physically concentrated, which then flow up into sovereign risk at the country level, but also into a cascading set of credit risks, where one company can have an event that can impact a subsequent company. The opportunity is obviously designed for sustainability, recyclability, refill, and reuse. 3 of my favorite ideas that all of you frequently talk about: alternative sustainable feedstocks and decreasing the use, of course, of single-use plastic. This is an example, a schematic of a supply chain. These are the top 10 companies that are publicly traded from single-use, that create single-use plastic, that then flow into the top 83 companies that we looked at that are in the plastics, containers, and packaging sector that then flow into we call fast-moving consumer goods companies. Now, if we look at one sector at a time, this is where single-use plastic production clusters are around the world. You can see that right now, one of them here in the New Orleans area is being hit by Hurricane Ida, which I'll talk about shortly. Now, we were very fortunate to be a contributor to the Plastic Waste Makers Index, which Nicole has discussed. The key concepts that came out of that is that we can scope the sector and we can rank the sector across different types of plastic production. There, as has been mentioned previously, the top 20 polymer producers account for what's estimated to be 50% or more of single-use plastic produced. Now, we can refine or define further that analysis, and this data is from Bloomberg and Nexent and the European Environmental Agency. If you have questions on sourcing and the data itself, I can point you in the right directions offline. Here we see 26 different chemicals that have been modeled across 3 supply chain nodes. Sorry, it's a bit complicated. Yellow is basic chemicals, orange is intermediates, which are used to create the plastics whose feedstock is the yellow, and the red is the feedstock resins. And these are for 9 different plastic resins. This includes polypropylene, high-density polyethylene, other polyethylenes, PVC, ABS, polystyrene, and expanded polystyrene, EPET. Again, you can see that the sectors are highly clustered, and this is a measure of capacity, which is different than utilization. So this is like how fast can the car go? 100 kilometers an hour. This how much can you produce on an annual basis? That's what capacity is. As you can see here, what's interesting from a European perspective, that significant amount of capacity is overlaid by a significant amount of toxic chemical releases that occur. So the Benelux corridor which is called the Trilateral Chemical Region, which is Flanders, Netherlands, and North Rhine-Westphalia, is a significant area of plastic pollution. I'm already behind, and I'll continue to move as quickly as I can, and thank you, Carolyn. We've also modeled the distance between these facilities and Natura 2000 protected areas, and using, I won't go into the technical side of this, we'll call it polygon to point. What we found is that the average distance is 1.5 miles. So what's happening is that none of these companies, broadly speaking, which is about 600 plus companies, as you see modeled on the map, are reporting their potential impact from the toxic chemical releases that they're making on protected areas. Now, if we go back, if you think of the type of toxic chemicals they're releasing during the production of plastic, it's benzene, dioxin, and many other chemicals that are both very harmful or carcinogenic to us as humans, and also harmful to natural capital and animals themselves. Jumping ahead to a separate paper, this is the Stormy Outlook. Here we looked at what's going on along the Gulf Coast. And what's very important here is that you're able to model sea level rise and storm surge risk, both using NASA and NOAA data. All data is publicly sourced. If you have any questions on that, just let me know, of course. I'd love to share the sources with you. Now here, what we see both that there's acute storm surge risk and there's chronic sea level rise risk. So right now we're seeing this happen exactly. We forecasted this last fall. Sadly, obviously very sadly, I have a lot of colleagues in New Orleans, as many of you would have, a lot of other colleagues in Louisiana. They're going to be having an enormously difficult time right now. As Hurricane Ida, this is a map just from about an hour ago. Hurricane Ida is hitting the area. Now, from a facilities basis, you can see in the far right here, they're hitting Dow's facility in Taft, Pinnacle Polymers in Garyville, Dow's facility in I can't read my writing, Black Marine, and ExxonMobil's facility on Baton Rouge. This is an area that produces 12% of the global capacity of 4 different resins, as you can see here, and these are the major companies involved. Now, what's happened is going forward, the U.S. is forecast to expand its production of plastic significantly in the next 15 years. This is data from Nexent, ECA, and Bloomberg, which is Nexent is a chemicals data source. As you can see, the production is forecast to increase. The majority of that is forecast to be exported by the US. The US wants to increase its exports of plastics to countries such as China. Now, when you look at the plastics, containers, and packaging sector, which is the next stage in the supply chain, you have 83 publicly traded companies. 20 companies dominate with 64% of revenue. None of the companies have any sustainability-linked bonds or loans except for one that came out on the 7th of January. And 53 companies have no policy at all on any of the issues that concern us, such as waste reduction, energy efficiency, water policy, climate change. Go ahead and read the screen. This is a survey of over 11,000 policy documents that I led with my analysts. Finally, when you put it all together, guess what? You can link like a handshake. This is my attempt to do a graphic of a handshake, a jigsaw puzzle of supply and demand. You can link cost of goods sold with revenue from upstream to midstream to downstream. For example, LyondellBasell, the Unilever, the Walmart. And as you do that, money exchanges hands going from upstream to downstream, but the policies that a Walmart or Unilever have should move at the same time upstream, which of course they're not. No punchline there. So in conclusion, publicly, companies need to disclose their transition plan for sustainable plastics. They're not. They need joint sustainability plastics initiatives. Some are, but most are not. We need to map equity exposure to corridors and clusters. That's not happening besides the work that we're doing. And we need to invest in sustainable plastic solutions. Finally, we need to look at green bonds and more broader like ESG sustainability-linked bonds and loans to focus on retooling the industry. Because remember, this is not just about plastics and the environment, it's about people. In the context in Belgium, Netherlands, and North Rhine-Westphalia and Germany, you have over 1.5 million people working in the plastics industry. And that's where the toxic chemical waste is the highest in Europe, measured by quantity of events that's associated with plastics production. So we have to make sure to get those people good jobs in the new economy. With that, I've gone very quickly through everything. We have a great event on September 14th. It's free if anybody wants to attend. 16 speakers on capital markets and plastics. And thank you very much. And I apologize for being a couple minutes over.
Excellent. Thank you so much, Gabriel. You were only just over, and it was well worth it to hear your reflections. I was particularly struck, you know, by the fact that so few of these companies are being asked to disclose any of the risks around sustainability on all of these dimensions. And also, I think you really presented well that we need to have the sustainability considerations being incorporated across the value chain. You know, it's great if we have some of the big retailers or the Walmarts or whoever trying, but we need this to go all the way upstream. So really fascinated. Hopefully we can come back to the Q&A as to where you see what policymakers can do in this space, because obviously there's paces for different, you know, there's working directly with companies and investors and so on, but where you see some of the strategic intervention points could be for those of us working in the policy arena. So I'm going to turn quickly now, but thank you again for an excellent presentation. I'm going to turn now to Alice Mary, who is a consultant with the UN Environment Programme, and she's been leading work there on unwrapping the risks of plastic pollution to the insurance industry. So it's another part of this finance picture. Alice, I give the floor to you.
Thank you very much, Carolyn. And if we could bring up my presentation, that would be great. Thank you. So yeah, as Carolyn mentioned, I carried out a study looking at the risks of plastic pollution for the insurance industry. And this particular study was carried out for the Global Partnership on Marine Litter and the UN Environment Programme's Principles for Sustainable Insurance. So if we go to the next slide, what we looked at here was how the insurance industry has a role in facilitating the whole of the plastics value chain and the people and the companies that depend on plastics. And we looked into how the insurance industry is involved in three ways. So usually we think of the insurance industry as underwriting risks. And obviously that's the most important thing that they do, or the most well-known thing that they do. But they also are involved in helping their clients manage risk, giving risk management advice and risk management services. And they're also collectively one of the world's most important institutional investors. Insurers invest enormous sums of money. So we really need to be thinking of them as underwriters, as risk managers, and as investors. And they facilitate the plastics value chain in all three of those roles. So if we move to the next slide, what we did in the study was we thought about the question of plastic risks and insurance from two angles. So first of all, how are insurers impacted by plastic pollution risks? And we looked at this across four categories of risks. So first, physical risks, and these have, I'm sure, been discussed at great length during this series of presentations. The different kinds of ways that plastics can have an impact on our physical world. So from damage that they do to the oceans to the risk that microplastics can affect humans' health. And actually, insurers are already feeling the impact of these kind of physical risks. So when we did the study, we talked to marine insurers, and they told us that they're already having hundreds of thousands of dollars in marine hull claims because discarded plastic fishing lines become entangled with ships and do damage. So this is already very much a reality for the insurance industry. There's reputation risks. So maybe in the past, insurers might have thought they're safe because NGO public campaigns usually targeted fast-moving consumer goods companies who really have their brands on plastic products. But increasingly, NGO campaigns are getting more sophisticated, and they're really looking to target those who are facilitating the whole value chain. And insurers are aware that there is a risk of them to be seen as important supporters of companies that in the end are causing a great deal of plastic pollution. Then there's liability risks, which is the risk that a company could be held liable for the damage that they do. So if for example, plastic waste is poorly managed, that they might be held liable for that. And actually, this when you speak to insurers, this is the risk that gets them most nervous. And specifically, one issue that we found was really important when we did the study was the chemicals involved in plastics. So if we think about phthalates or BPA, for example, these are chemicals that are involved in a lot of plastics and have been found to be responsible for a great deal of potential bodily harms. And there's a firm called Predicat, which models risks for the insurance industry. And they did some research into these chemicals, and they found that this was the single largest potential products liability risk for insurers to be thinking about. Not just within a plastic context, within the whole context of product liability for insurers, because of how widespread plastics are and because of how many different harms these kind of chemicals can be responsible for. And if you think about the insurance industry that has in the past almost been brought to its knees by certain claims, for example, around asbestos, you can see why these kind of possibilities make them quite nervous. And then we have transition risks. So this is the risk as legislation moves, as public opinion moves around plastics, that companies aren't able to keep up with new regulations. They're not able to keep up with these positive moves that we want to see happening. And where insurers' clients and insurance investments are affected by these kind of changes, insurers will be as well. Moving on to the next slide. We really wanted to look at not only why insurers should be worried, why should plastics matter to insurers, but how can insurers be part of the solution to overcoming plastic pollution and to tackling the risks of plastic pollution? Because it really is the industry that, they are our experts in the world on risks. So what can be their role in helping tackle this risk? And we came up with 10 different ways, and I just want to mention a few of them right now. One is including plastic and plastic pollution in the way that they model risks. So in their decision-making, when they decide whether to take on a risk or not, and also when they're giving advice to their clients about how they should manage risks, to make sure that they are experts on plastic pollution risks and they can advise their clients about why these risks are so important. Another interesting possibility that we looked into was that insurers could actually design insurance products to cover risks around plastics. So in December 2017, Bali had to temporarily close some of its most popular tourist beaches because there was an influx in plastic pollution. And we looked into the possibility that insurers could consider offering business interruption insurance to cover these kinds of surges in plastic pollution, and that some of the money that could come from such products could be used for cleanup efforts. This kind of product doesn't exist yet, but there is some interest in the insurance industry about creating these kind of products. And finally, we think that insurers are really key partners with companies as they go through the transition away from single-use plastics and towards a circular economy for plastics. And we are starting to see some leading insurers taking on this role as a partner through the transition. So we spotlighted, for example, in the paper Aviva, which is engaging with fast-moving consumer goods companies, including Unilever, including Nestle, to see with them how they can tackle these risks and how they can move, and how the insurance company can help them manage the inevitable risks that are involved in taking that transition. And at the same time, Aviva is actively investing in plastic alternatives and recycling, so they're taking their role as an investor in this area as well. So thank you. The last slide. Just to point out that you can find a copy of this paper online, and I'll copy a link into the chat. And we're keen to continue this research and expand it. And we're looking at the moment into doing some work, looking more deeply into specific lines of insurance practice. Please do let me know your questions in the Q&A box. Thank you, Caroline.
Great, thank you so much, Alice, for an excellent presentation and review of those issues. I'm sure there are many others besides me who this is really their first look into this area. And I have to say, I was just thrilled when I saw the announcement of this paper earlier this year, because I really feel like this, we're sort of building up a picture of what enables this sector to function in the way it does. And so, if you want to try and shift different parts of it, we need to understand all of these pieces of the financial puzzle and how they contribute, and how we can strategically look at the parts of that puzzle that matter most to making a difference. So thank you very, very much.
Thank you.
I'm now going to turn to Ronald Steenblik, who's a senior fellow at the International Institute for Sustainable Development. You can also see his bio online. I would just cheer for Ronald if I could. He was really a past breaker in the study of subsidies in a range of different sectors, in agriculture and in fisheries. He's now supposed to be retired, but Flanders powers on, and then we've now managed to get him interested in plastics and petrochemicals. So Ronald, please, you have the floor.
Hi, thank you very much, and thank you for organizing this, and it's a real pleasure to be here. This is a really big topic, so I'm only going to be touching on the question of subsidies lightly. I don't think I have to really explain why it's important to track how much governments are supporting different parts of the supply chain for plastics, particularly for primary plastics. But what I did for Carolyn was basically try to say, well, how should we look at this, and what information is out there, and what information do we need? So the basic idea, and for me, a lot of this was new when I came into this, is trying to understand the sequence of the production chain. I mean, basically here it's just to point out that there are different types of subsidies provided all along the supply chain. Probably the most extensive information is on the actual underpricing of the feedstocks that go into the production of fossil-based plastics. And in the past, it was mainly from naphtha derived from crude oil, but increasingly, particularly in the United States, for example, it's coming from natural gas. So that's made into intermediate products and eventually ends up in resins. Beyond that, of course, then you have the converters and you have the manufacturers of the plastic products. So the first question is, where are the prices, the domestic prices of fossil fuels kept below the international prices. And so this is where I had more experience, was on subsidies to fossil fuel production and consumption. So we would call these this consumer price support. So the extent to which the domestic prices are below. And so ranked by their actual plastic production, we have China, the United States, Korea, et cetera. So these are the top ranked countries in terms of plastic production. You see that in several of them, the domestic prices are kept below the world prices, and the numbers in the third column is the total value of that. And then you have some of the same countries are also keeping natural gas prices low. Those are typically countries where a lot of associated natural gas with petroleum production. What's perhaps more interesting are the more targeted subsidies to actual polymer production, and so we don't. There's not really a whole lot of information that's been compiled yet on central government subsidies to primary plastic producers. We've identified a few, and maybe a really good source in the future would be to actually go through annual reports of some of the companies. For example, we looked at the BASF Group's annual report, and they mentioned receiving something like 27 million euros in 2019 and 43 million euros in 2018 for their plants. Many are a lot of support is provided by subnational governments, and the best data on that are for the United States, where in any case that tends to be more the case than a lot of other countries, because there's really no enforcement at the central government level of these kinds of supports. My guess is there's a lot of this going on in China as well. And so we looked at the subsidy tracker database and identified quite a few. I mean, we're talking about collectively billions of dollars in soft loans, in tax abatements, and some grants as well. The plant here is a huge plant that's been built in the picture by Shell in Western Pennsylvania to use fracked gas. So just to conclude with what can be done, I haven't talked about the actual manufacturers of plastic products, and one of the difficulties there is there's tens of thousands of companies, but we know that many of these plants can probably benefit from government support. For example, India in 2013 set up a policy to help encourage the growth of plastic manufacturing in their country, and they provided grants of up to 50% of the cost of each project, or up to $6 million per project. That can all add up if you have a lot of these. Coming back to these local governments subsidies, a lot of these are often targeted to try to encourage investment, and you get competition between localities to provide this kind of support. The EU is also, though, has provided some of these through targeted regional aid, and I looked at a list of these, and we're talking over $100 million during the period of which the database that we looked at. Just finally, and people have talked about financing, there's a lot of projects that are financed by multilateral investment banks, by export credit agencies, and so forth, particularly in African countries where they're trying to diversify the economy, or particularly where there's a lot of associated gas production, and then the question is, well, should these countries export it as LNG or turn it into products. And there seems to be a lot of encouragement to turn it into petrochemicals. So yeah, research agenda. I had this, the photo here is a credit card. I thought this was appropriate since we're talking about plastic money, and just that the credit card, as many of you know, is the amount of plastic that each of us consumes in a week, is the equivalent to the plastic that's in one of these credit cards. So the one could, I think that work needs to be done to identify which petrochemical refiners are benefiting from low feedstock costs, not just which countries that might likely happen. Drill into databases on subnational support, and expand information on government and multilateral credit that is benefiting facilities producing polymers or plastics. So I'll end there. Thank you.
Excellent. Thank you very much, Ron, for an introduction also into the challenges with doing research into this area as well. Just before turning to our next speaker, I just did want to pick up on something that you said and Gabriel mentioned at the beginning, is this question of sort of the sort of a political economy question behind all of this as well, in that there are millions of jobs at stake in different countries, people who are employed in this sector already, and also specifically in developing countries, where many countries are indeed seeing this as a potential growth area for their economies, particularly those who want to add value to raw materials and commodities that they produce. So we really have this, that there's going to be a real question around how do you promote transformation in that context, and a just transition as well out of these industries, which is also going to be a question for investment and finance, is how do you finance the alternatives or the other sectors, so that you create this new economy or different jobs in other sectors. And I know my colleague Diana will be speaking a little bit about that tomorrow, based on some of the work that UNCTAD's been doing on the Green New Deal. And how we also do transformation and transition in the climate context. But enough from me. Now I'm going to turn to Guy and to Diana, who've been digging deeper into some of these questions of subsidies and investment in the plastic sector. So Guy, I'll turn over to you.
There we go. Thank you very much, Carolyn. Yeah, and welcome to our contribution to today's panel. So Diana and I have been working as part of a collaborative research between Lund University and UNCTAD. And yeah, we're just currently finalizing a joint paper which is focusing in on the finance flows of the petrochemical industry in recent years, in order to map trends and to disaggregate the dominant sources of financing and the sites of concentrated production on a geographical basis. And I've noticed already there's been a lot of discussion so far in this conference on the need for a deeper focus on the upstream processes of plastic production. So hopefully our research will make a meaningful contribution to that. So I'll flick my slide. There we go. Yes, so we are looking at three eras with global climate governance landmark moments as acting almost as bookmarks for these timeframes. So here on the left, we've got the disappointment of the lackluster climate negotiations in Copenhagen at the close of 2009, leading up to the landmark Paris Agreement in December 2015. That came with the initiation of the SDGs and Agenda 2030 and so forth. And then from there, right up until the beginning of the global economic shutdown due to the COVID-19 pandemic, which again acted as a way of reigniting the debate to build back better and using the necessary economic recovery to the pandemic almost as a catalyst for significantly ramped up climate ambition. And February 2020 is the rough date that we used for the global lockdown. So then, so we've got a couple of figures here that display a gradual decline in absolute terms in new financing for infrastructural petrochemical projects, using the aforementioned three environmental governance landmarks as the time frame parameters there. And as we can see, it's unequivocal that state support for new projects in historically high emitting industry is dwindling, and it is being constantly dwarfed by the private flows of financing. And the magnitude of this dwarfing is getting bigger and bigger. But when we consider this through a lens of per annum flows, we can see that the finance that goes into brand new builds is actually showing little indication of slowing down. But the question is, why is this? is the COVID period, is it bucking the trend of financing in petrochemicals because we're having a much bigger projected demand of plastics once the global economy gets up and running? Or is it a sign that the industry is accelerating its decarbonization efforts and needs the necessary financing to hasten this transition? Of course, this remains to be seen, and it'll be highly dependent on the uptake of green bonds and other forms of green financing and so forth. Just before I hand over to Diana, I'll just say that the data we have here is derived from the IJ Global database, which tracks the transactions in the global infrastructure market. But now I'll run through to Diana. They'll have a look at a snapshot of all the active finance flows in the industry before offering insights on the role of multilateral development banks and central banks. Over to you, Diana.
Thank you, Guy. Sorry, everybody, you've got me again. Carolyn was very generous in her distribution of duties to the home team. So what I would like to discuss here briefly, this rather beautiful Sankey diagram. So what we've shown in this diagram, this is all currently active funds flowing into the industry. I say all as we have discovered them in the various databases, the Bloomberg and the IJ Global and some individual websites of banks and firms. If I can just direct your attention to the far left-hand side of this chart. And what we really want to see here is that the state contribution is reasonably low in the petrochemical sector. This is the green ribbons at the bottom of $38 billion. That's reasonably low compared to the private flows, which are now some $213 billion. So these are, as I said, these are all active flows right now. It's a huge amount of work to do this data set. And I have to say, it's Guy who's been doing all the trawling through the data. So thank you for this huge piece of work, Guy. But so what we see in here is all the flows that are currently active now. So they're still coming for maturity. And we plan to do this exercise again in a couple of months, just in case there might have been a big load that are coming up for maturity that change it dramatically. But what we already know from the study that we did of the COVID financial flows, the COVID financial flows, the state share of that is less than $1 billion. So this, out of this 38 billion that we're looking at, approximately 37 billion of it was all before COVID, and 1 billion is over COVID. Now, why do we care so much about whether this is state finance or private finance? Well, first of all, we want to track, what is the contribution into the plastic from institutions where there has been a commitment to a green ambition. There are often pledges for low carbon, and we want to know, how are they going to actually make that pledge a reality? The second thing is that state investors can support change. So they can be a positive force in the transition and in the transformation, because state investors have a different set of incentives from private investors. They can have a longer time frame, they can take a different kind of risk. So we don't know yet what was the purpose of these state funds, but it's important that we are able to go further into this. This is our work in progress. And then the third thing is this question about exposure to shock, which I think our insurance speaker brought this out very nicely before. So, this was something that the Bank of England and Mark Carney started talking about 4 or 5 years ago, and it's now become a much more awareness of this, is that if there's an uncoordinated rush for the exit out of petrochemicals, this would be a very damaging thing for the people that are working in the sector, and for the insurance companies, and for the whole part of the economy that's built in this. So we do actually want to have a sense of where the exposures are and how these might translate as we go through time. So a number of messages that we're getting through here. Now, one other question that we want to think about is the individual state contributors. So looking at, now stay in the green ribbons, and let's think about who are these individual state players in here. And the biggest one that you see in the middle of the screen is the central banks, who are purchasing corporate bonds as part of the usual operations to help stabilize the financial system. Now, there's been a huge amount of this, as we all know, in the COVID era, the COVID recovery package. But what we also know is that was less than $1 billion. So most of this is from the period where we started our research from Copenhagen through Paris and now through COVID. Most of this exposure is from before COVID. So at the same time, though, there's concerns that COVID recovery packages, even though it's only $1 billion, which is small in the scheme of all these other things, it's still very important that these state purchases should be aligned with government carbon goals and whether they're going in the right direction for the commitments that were made in Paris and Copenhagen, and even particularly more in this post-COVID environment where there's a talk of a Green New Deal and aligning everything with the green recovery. So one of the reasons that central banks may have such a high presence here is obviously the philosophy that they should be market neutral in their purchases of bonds, which is that they should be entering the market in a way that doesn't bias or tilt it in one particular direction. So that tends to mean they buy bonds in really big companies. And that tends to mean that they're more likely to be fossil fuels and they're not going to be alternatives who are new little startups. So there's some very interesting debate that's starting now about whether central banks should go back to the policies of previous decades where they did actually strategically try to bias and tilt. And these days they haven't been. At the same time, we're thinking about what have these central banks done in the COVID recovery period. Well, all these banks have got very green ambitions, and they are increasingly requiring disclosure requirements of firms. But at the same time, we do see that they have been active in the petrochemical bond purchases since the COVID recovery period. It's difficult to know exactly how much and which firms because this information is all kept confidential because they don't want to privilege some firms in the market. But we know that the ECB, for example, bought stakes in about 130 corporate bonds and companies that are active in petrochemicals. And while we don't know exactly which companies or how much, we think it's about $10 billion, 10 billion euros. So this is a lot of money. Is 10 billion euros being used in a way that is helping those firms to transition, or is it just business as usual? This is something that we don't know. So similarly with the Fed and the Bank of England, they're all holding some bonds here. Now, the question is, can central banks use these holdings to nudge the firms into the direction that we all want them to go, which is an adaptation or low carbon transition? If they can do this, this is an argument that the banks have used, that they can try and do this, but it's not automatic. So there's clearly that we need to be having a debate about this. However, I'd say that this role is really important more now than ever, because we've seen this massive growth in the private sector bond purchases in petrochemical industry. And first of all, these are huge, compared to what we're seeing with the state agencies or institutions. But also what we do know is that out of more than 2,000 bonds issued by the petrochemical industry, only 22 were called green. Okay, so on the one hand, we've got this huge movement in the rest of the financial markets moving towards green bonds, more than $1 trillion, apparently, as of the data that we're looking at for right now in my trade and development report. Of that $1 trillion of so-called green bonds, only 100 billion is certified green bonds. But what we're also seeing is that of the bonds that are issued in the petrochemicals, only 22 were green. So there's a big gap here. There's not much green investment, certified or otherwise, in that sector. Looking just very briefly at the multilateral developments, if we stay in this diagram for a minute, sorry, just go back, guys. So just 1 second. So the bottom ribbon, go right to the left-hand side. This little bottom ribbon, we've got $2.3 billion. This is multilateral development banks purchasing bonds in petrochemical. Thank you, Guy. If we could have the next one now. Thank you. So this is extremely small relative to the rest of the finance in the petrochemicals. But we would say that as with other forms of state support, this can be extremely important, way beyond the actual power of its immediate footprint, because MDBs can anchor in other finance and other investors, and they bring name and stability to a deal, as well as access to cheaper finance or privileged finance. So again, it's not clear to us whether the role of the state institution is supporting transition or whether it is supporting business as usual. This is something that we need to continue with further research. But what we are seeing is that MDBs generally are in a mode of transition. They have pledged many of the MDBs on this page, in fact, I think all of them have pledged to give $66 billion, or to lend $66 billion in climate finance in 2020. So out of that $66 billion for climate finance, we're talking about only $2.5 billion currently in petrochemicals, and that has accumulated since Copenhagen. So this is very, very important, because if firms are trying to make a transition out of high carbon and plastic, excessive use of plastic, we would say, how are they going to do this? They're going to need to have transitional finance. It's got to be stable long-term finance. You need to have particular expertise maybe in the sector and in the industry. And MDBs can do this. This is actually what they're set up for, is to do these kind of investments that have a social role. Because who else is going to finance transition if not these MDBs?
Diana, Diana, we have to draw to a close because we need to keep some.
Well, you didn't do the little ding the bell.
I've been dinging. I just don't think you've been hearing because you've been so focused, which is excellent.
Oh, sorry, I can't hear a thing. Okay, well, I'll just finish by saying MDVs are absolutely critical, and they're underfinanced for the job and constrained by mandates that are not clear. Stop.
Oh, you're perfect. You're up to the end anyway. So I'm sorry. I was just hoping not to have to interrupt you. So look, we've had a great set of presentations. I think we've really covered a broad terrain. So what I'd like to do now in terms of the Q&A, we haven't received a lot from the participants, but we have received some. But what I think would be the most useful is to come back to this question for each of you, just to give us an insight as to what you think could concretely be done in the policymaking arena on this. Well, sort of what do key stakeholders need to do? So it might be in the private sector, or it might be in the policymaking arena. Sort of what next? Is it about new evidence? Are there new decisions to be made? Are there different people who need to be pushed together? And I'd be particularly interested in, you may not follow the plastic pollution treaty negotiations, but are there any elements of this picture that we need to somehow build into the narrative around what a new plastic pollution treaty needs to do in terms of trying to help move, support transition through investment and financing? So there are sort of my questions, really the policy one. And of course, if you want to comment on the work of each other, because a lot of your work is intersecting, please do feel free to offer input or suggestions for others. So I'm going to start with Gabriel.
Thank you, Carolyn. And I really enjoyed the presentations. It's really an honor to be on a panel with such distinguished colleagues. So jumping to your question, and to be crystal clear, I hear daily from investors. And so the people I talk to on a daily basis are S&P, BlackRock, which is the largest investor in the world, Vanguard, I'm supposed to talk to them tonight, second largest investor in the world. And they ask for one thing, that we convene maybe a private working group or a collective working group, and somehow to discuss and see if we can crowdsource what would be a set of policies they should enact. In other words, what happens is one asset manager can create a set of policies, but if the others do not, there's a competitive pressure there. Separately, by crowdsourcing and working together collectively, we'll be able to address the issues that, from their perspective, repeating what they've told me over and over again, is that polyvinyl chloride, for example, is a very different supply chain than PET, which is very different than ABS. Here's my phone, which is very different than plastic containers and packaging, or plastic wraps like polyethylene and polypropylene. So they want to have a conversation about what would be the appropriate set of equity and fixed income, Diana, thinking, and Guy, thinking of your analysis of policies that would be appropriate from a quarter by quarter basis to this 2025 policy moment in the EU, or through the further moments, policy moments. So we can think of what would be those key performance indicators. Now, why are they asking for this? That's the counter question, right? They're asking because they may have a policy or an environment, someone might call an ESG, environmental social governance expert, who covers like climate, but plastics, of course, has a very strong environmental justice angle. Think of the communities in the United States in Cancer Alley that are being pummeled today by Hurricane Ida. So they themselves do not have the skills that we collectively have. They look at plastics differently than the lens that we look at plastics at. And so our ability to think and work with them directly, informally, most probably in a private working group, would be very, very helpful. So that's my only ask, and that's what I've heard for 6 months. And if you want to meet those individuals, Carolyn, I'll of course introduce you to them, because that's the only way we grow and work together is by coordinating. Thank you.
Excellent. Thank you so much for the concrete suggestion. One thing it's a shame today we missed, we were going to have a speaker also from the Principles for Responsible Investment organization. I believe that they have just put out a set of principles specifically around plastic packaging for investment in plastic packaging sector, but she wasn't able to join us. But I myself, I'm certainly not an expert in investment. I'm just keen to catalyze the right activity and put the right players together. So if we can be of help in that, and colleagues that on this call and others, I think that's something we could definitely look into together. So moving now to Alice. Alice.
Thank you. Yep. I mean, I think one thing that's interesting when you speak to the insurance industry about this issue, the risk is that it ends up feeling like a bit of a niche topic. You know, the insurers, like investors as well, they're really consumed with attempting to tackle climate, attempting to tackle nature, and you go and say, oh, plastics as well. And so I think what is key within the insurance industry and those who want to get the insurance industry on board is to really fit this topic within key topics that the industry is already tackling. And particularly, you know, the three big environmental issues that I was climate, pollution, and nature. And within the emerging disclosure frameworks that exist under those. So one thing that we're trying to think about within UNEP is the Task Force for Nature-Related Disclosures, which is this kind of reporting framework at the moment, voluntary, around nature. How can we make sure that plastics is considered really seriously within nature disclosures? How can we make sure that plastics is considered really seriously within climate disclosures and so on? So that it's not a standalone topic, but kind of fitted into these priorities that insurers are already, you know, putting considerable resources and efforts into tackling.
Great. Thank you very much, Alice. I was also just thinking for both of you, I know in the context of the treaty discussions, there's sort of this sense that what's really needed is a shared set or a clearer set of global goals and targets around these issues, which might, you know, of course, they will take some time to negotiate. But my sense also is there's now, you know, sort of the plastics pollution problem is multidimensional. So there's all these different aspects of it that people are talking about. And it would probably be helpful to private sector efforts as well if it was clear that here are some global targets in this area. And so here's how your work could contribute to or be relevant to those targets. So it's a bit clearer what the, you know, maybe there's 8 or there's 3 or something like this. But I will keep quiet and turn to Ron.
Yeah, I'm not sure what question is supposed to answer, but what I was interested in answering was your original question, Carolyn, that you asked after my presentation, and I've been trying to think about that. I mean, on the question of jobs, there's 2 questions. One is just how many people are involved in the actual production of polymers and resins and so forth. And I would guess that actually in terms of the whole plastic economy, that's a fairly small part of it. But yes, it's typically, as we've heard from others speaking, it's very geographically concentrated. So that's important. But I keep thinking about the actual the push into producing plastics from fossil fuels, and there's multiple pushes behind this, but the two that keep bugging me is that you have a lot of countries, including even some that are, with very high otherwise environmental credentials, who basically look at their fossil fuels as this is wealth in the ground. We cannot leave this, basically think of it as gold. We cannot just simply walk away from this gold. We got to keep producing it because it's there, and we got to use it. And then if you think, if you have a lot of countries that are in one sense, understandably looking at it that way, then you also have the question of, well, there's my understanding, and I'm not an expert on this, but that there's only a certain amount of flexibility in terms of what you do with petroleum, particularly. You have more flexibility in one sense with natural gas, because you can just basically burn it all in electricity generation if you want. But that there's a lot of push of, well, this has got to go somewhere, and the logical somewhere for a lot of these is into petrochemicals, and the petrochemicals tend to be dominated by plastics, or at least a large share of it is. So I think that the questions are much broader than just plastics, but the whole fossil fuel economy. And if we're moving away from the fossil fuel economy, then that means basically, and I mean, if a lot of us are serious about what we're saying about we have to stop consuming it, then we have to stop producing it, and then that means that all these feedstocks for plastics dry up. So I think we need to be thinking about this holistically, and what kinds of feedstocks, besides just simply recycled plastic, ought to be going into all of these industries that are currently dependent on plastics.
Great. Thank you very much. Very, very, very much, Ron. So Guy and Diana, you have 2 minutes between each of you, and then we need to wrap up. So could we have just a quick comment from Guy and then Diana?
Sure, I can jump in. I just wanted to relate to what Gabriel was just saying earlier about the calls from huge investment funds such as BlackRock and Vanguard. I mean, they are ubiquitous in this industry. I mean, 46 of the 50 largest petrochemical companies, BlackRock and Vanguard have stakes in 46 of the 50 largest companies. So there's certainly a need for regulation or the creation of global standards for sustainability criteria that investment firms need to reach, either in equity holdings or in the commercial bond market. We've seen in the Sankey figure that we showed before that there's a lot of money going into these algorithm-based exchange-traded funds, which are very dynamic, and they flit between different industries very quickly. But when you look at the sustainability criteria, which is lacking a lot of transparency as well, but they have usually single-figure percentages of the UN Global Compact violators, they're labeled. So being proved to do damage to either planet and society in a significant way. So there needs to be some kind of like non-voluntary framework that has to be adhered to. So perhaps the state would have to step in that regard. And I think the other like policy recommendation that we'd be looking at would be setting like near-term moratoriums for like central banks and multilateral development banks, export credit agencies, and export-import banks for high-emitting infrastructure. Because even as we saw with the low figures, without the legitimacy and credibility that they offer, many of these multi-stakeholder operations, they simply wouldn't get off the ground without their participation. So yeah, I think those would be the two takeaway comments I would give there.
Thank you, Guy. Diana, you have the last word.
Am I allowed to take away comment too? Okay, thank you. So I would just agree, I think, with what Ron's indicated, that this is a really, really big holistic question that is the whole of the fossil fuel sector, not just plastics. And either way, if there's a sort of uncoordinated and slightly chaotic response, this would actually be, each way could be very damaging. So the kind of stampede out of the sector would be very damaging. This is industry that employs billions or millions of people, billions of dollars all over the world. A massive stampede would have very dire financial implications. Similarly, a massive rush to quickly kind of consume and produce as much as you quickly can before the door closes, that would also be incredibly bad. So we need to find some kind of regulated, guided path. And as Gabriel said, nobody in the private sector wants to be the one that stands alone making the leap if the others are going to go behind them. And so we look for leadership from the public sector, I think, in this. But the public sector has got some very good tools, but for the most part, they're underfinanced for the kind of job that they have. And they need to have very clear mandates from, banks owners, which are governments, need to be really clear, give them the space to do it. So I'm going to stop because you're on time. Thank you.
Well, thank you so much, Diana, and thank you to all of our panelists. We're really, really grateful for the insights that you've provided, and I think it would be great to continue this kind of work across the range of different researchers. I'm sure there are many beyond this group who are working on these different finance aspects. I think we can all see that there's links between those. Obviously, Gabriel, you're there at the front line with the investment sector. I know Dana's work is much more with the central banks. Ron is a great expert on subsidies, and we have Alice, you there on insurance. So I think there's a way of putting together a bigger set of work, or a coordinated set of work in this space where we can build on the expertise that each other has. Thank you also, Guy, for just fantastic granular research on all of that. That was really great to hear. So just a last request on behalf of the organizers, if any of you have 1 minute, is just to try and fill in the feedback form for us on this event. It's posted there in the chat. You could also do it in the next session if you're attending. But thank you again all very much for your time. And I look forward to speaking with you all again. And thank you to our participants for listening. Thank you.
Thanks, guys.
Thank you.